Hey everyone, and welcome to this video, the recap of the week with SIFI. In this video, we're gonna recap 2 weeks of trading, 2 weeks of the action that we did with the community on the SIFI scanner. So let's dive into it. As you can see, the last video that we actually recorded we went over the Euro USD trade on April 16th. So today we're gonna go over Euro USD, USD CHF, AUD CHF, gold, and GBP USD. So we got some trades to go over. So I'm gonna dive straight into it. The first trade we took was a Euro USD trade. And I also logged GBP USD on this because these pairs correlate, of course. But I believe there was something to learn from the GBP USD trade, and there was something to learn on why we took GBP USD and not Euro USD. So let me check GBP USD right here. So what do we see? Of course, we have the 3 steps, right? I'm gonna write down the 3 steps first. 3 simple steps when we are using SIFI. First, we want to get notified that we have a dark shade arrow. Then we want to make sure that we're at the right level to execute by identifying if we have a 2-day pullback or not. And then to really confirm our entry, we want to have a reversal pattern, which can be an M or a W pattern. Okay, so those are the 3 steps we look for. And if we look at this chart, I know there's a lot of drawings, just stick with me. We have the first 2 arrows right here. So we have a dark shade arrow, great. That's step 1. I'll drag the steps in here as well, so you can see them right there. So we have a dark shade arrow, that's great. That's step 1. Do we have a 2-day pullback? No, we do not. So as you can see, the pullback starts right here. This is the highest point. This is the lowest point. This is 17 hours. This is not even 1 day. Now, the 2-day pullback is not there, but those that are more experienced, you know that you can also look at the pips. The average pullback on GBP USD is 160 to 180 pips. This pullback is 190 pips, which is already above average. So since the pullback is maybe not long enough, but it is pretty big, this can still be considered as a valid play. Now, we're not logging this in the track record, so we're not counting this profit, but I know people that are more experienced, they will take this trade, okay? Now, what we see is then we go to the 3rd step, and we see a big W pattern. Now, on this W pattern, if we would have entered and we would put our stop loss below the low, you can see we have a stop loss of 68.1 pips. That's close to 70 pips in the stop loss. We actually rarely want to trade anything over 30 pip stop loss. Okay, so if you don't want to trade anything over 30 pip stop loss, you're not going to take this trade. So I personally didn't, and that's also why we're not logging this profit in the logbook. Now, then what happened is we just waited. We didn't execute. We saw the trade, going in a bit of drawdown, whatever that was, but we weren't in, so that didn't really matter. Then we see another arrow at 3 in the morning. This arrow at 3 in the morning has its own W. Of course, the stop loss still needs to go below that low, but it has its own W, which is why some people executed right here. Now, personally, again, we're not going to count this in the track record because this is just not the setup that we are looking for. And mainly, at the same time, just as it shows in the track record, we had a Euro USD trade. And the reason why we preferred Euro USD over GBP USD, of course, both pairs, they correlate, but the reason is pretty simple. I just showed you, the whole thing of the 2-day pullback and the pips and this and that. But if you just look at Euro USD, this chart was way simpler to understand. Because Euro USD, if we go over the 3 simple steps, we can see that we have a similar chart, right? As you know, these correlate, meaning they will look alike. And they do. We have 2 arrows, just like we had 2 arrows on the other pair, right? We had 2 arrows on GBP USD as well. We have a big impulse giving us that big W with the big stop loss. So we were not interested in taking this. But then what do we see? Is we see that the price moved down even lower, giving us a new W, and also at 3 in the morning, giving us the arrow. Of course, I didn't enter at 3 in the morning, but by the time we were on the call, at 7:45, we hop on a Zoom call. By the time we were on the call, we called this trade. And I'm not going to go risk 2% on Euro USD and then risk 2% on GBP USD as well. So we only did Euro USD. And by taking this trade, we actually entered at 8 in the morning, I believe. 30 minutes later, we printed another arrow, which confirmed our bias even more. That's great. So this arrow was not even there at the time of entry. But yeah, we entered over there on the call, and then we actually hit profit pretty fast, risking 2% on this trade. The stop loss just went below the low, and gaining 4%. So that's basically what you can see right here. We risked 2%. Our risk to reward was a 1 to 2, and this gave us 4% in profit. The whole breakdown of the correlating pair, GBP USD, and how we anticipate it is on here. So you can see it with all the, the pictures, etc., etc. Some people took both trades and have doubled the profit, but for the track record, we're only going to log one trade. So that's the first breakdown of Euro USD and GBP USD and why we took Euro USD over GBP USD. Then, of course, we had another trade, which is USD CHF. USD CHF was an interesting trade as well. Yes, here we go. So as we can see, we had a dark shade arrow in the morning too, but we had a lot of time to enter. And that's a good thing. With SIFI, as long as the target 1 is not hit, you can still enter the trade. Meaning, let's say, your entry is right here. So let's break it down. We have the step 1, dark shade arrow. Yes. Then if we zoom out, we see a 2-day pullback. Yes. And then the M pattern, the reversal pattern we are looking for, we can see that as well too. That's great. So the 3 steps line up. Right? Now, if you miss this entry at 3 in the morning, as long as you don't hit target 1, which is right here, you can still enter, right? Once you hit target 1, you don't want to enter anymore because by the time you hit target 1, you should have been in and your stop loss should already be at break even, right? So as you can see in this zone right here, this is actually all time to enter the trade. So between 3 in the morning and like 8 in the morning, that's 5 hours of time that we could still enter. Firstly, we did right there on the entry zone, stop loss above the high. That's a 30 pip stop loss, which is perfect. And then we pulled out the trade 1 hour before the news. So at 2:30, you have the red folder news event. We had to pull out that trade over there, giving us a risk to reward of 0.95. 0.95 in a track record with 2% risk is going to give us a 1.9% profit. So that's great, right? And that's basically the trade on USD CHF. Then the next one. Let me see. I believe we have gold next. No, we have AUD CHF first. So April 25th, we had AUD CHF. If you look at this trade, you see a very big pullback. Of course, we have the dark shade arrow. We have a very big pullback of 4 days, which is great. Let's take the chart itself. So what do we see here is the first few arrows we had, we already had a 2-day pullback. So that's great. The reason we didn't take them, it's pretty simple. There is no clear W. So do we have the dark shade arrow? Yes. Step 1, complete. Do we have the 2-day pullback? Yes. Step 2, complete. Do we have the M pattern that we're looking for? No. This is not, I don't know what, whatever this is, that's not what we're looking for. So Therefore, also the stop loss would have been way too big, but therefore we didn't take these arrows. We were waiting for the next one. And the next one, you can see the 2-day pullback is of course complete because that was already the case before. We have the arrow and we have a clear M pattern. This clear M pattern indicates that we can now enter. And as you can see, this is a unique scenario because we have a red arrow on a blue candle. And this doesn't happen a lot, but it's a great thing because now our entry is higher. And the higher you can enter for a sell, the better, right? So we entered on the open of this candle right here. Stop loss above this high. That's about 25 pips in stop loss, which is great. And then, of course, we drop down pretty fast to the first target, putting our stop loss at break even from this point. And then from there, we actually came very close to hitting that break even once over here. And then we came even closer to hitting it a second time over there. Personally, I didn't get kicked out. Maybe some people did. But if you look at the entry and you look at the pips, you see that it came very, very close, but it didn't touch. So that's also why I was personally not out, which is great. And then it dropped down pretty fast to our target, giving us a 4% profit. Okay, if you're out on break even, that's also fine. It just depends on your broker probably, or how tight you put your break even stop loss. Then it dropped down even lower. Of course, if you know market structure, maybe your target was a bit further. But for me, a 1 to 2 will do. And that's really exactly what we had here. So again, the explanation is, of course, here in the track record. Then we had a gold trade. A gold trade is great. I think it's our first official gold trade in this track record. I like to trade gold a lot, and especially with SIFI on the lower time frames. But even now we had a 30-minute arrow. And let's take it to the chart. On May 1st. As you can see, we have this dark shade arrow over here. So this is the dark shade arrow we're looking for. Cool. Step 1 complete. Step 2 is a 2-day pullback. Our pullback is close to 3 days, which is great. But even before that, the price has actually been dropping for a while, right? It's just the last significant move was right here, about 3 days. And then, of course, the reversal pattern. We actually have two patterns that are, a bit of like inside each other. But I like this bigger W the most. And the reason being is I want to have my stop loss below the lowest point of the pullback. So if you look at a pullback, it's gonna be down when we're in an uptrend. If this is the lowest point of the pullback, I want my stop loss to go below this. Okay. Now I also want my stop loss to go below the lowest point of my W. That's why for me, this is going to be the W. And the W is always going to be, its first leg is always going to be the lowest point of the pullback. So if you look at this pullback, what's the lowest point? That's this one right here. That's the lowest point of our pullback. So this is going to be the first leg of my W. Then you can see we go up, we go down again, and we go up. And now we have our complete W. Of course, I also see that if you zoom into this, you have the W again over here. The reason I don't like this W too much is actually two reasons. For those that know the 2-to-2 rule, it has 2 candles down, only 1 candle up. This big blue candle, 2 candles down, and then 3 candles up. So that's one thing. But the second thing is why I like the first one more is because when people draw this W, they're going to put their stop loss below this low. And if you put your stop loss below this low, it's fine. A lot of the times that's not going to be a problem. But sometimes the market might pull back a little bit. And it might come down here before going up again. Okay. That's why, for me, my stop loss is always below the lowest point, as you can see right here, of the pullback. So in this case, that's going to be here. So I always draw my W at the lowest point for the first leg so that I can be confused. Because if I'm drawing my W over here, like this one, I'll put my stop loss over there, and then my stop loss is actually placed incorrect according to the strategy. Of course, if you do your own thing, then you do your own thing. But according to the strategy, you want to have your stop loss below the low of the pullback, because once that structure breaks, I want to be out. As long as that structure doesn't break, I don't want to be out. So I'm not going to put my stop loss there. So we learned a lot there. On the session, we talked about it as well, and it was really clarifying for a lot of people on how to really look at a W and et cetera, how to draw them, how to recognize them. So that's some information that helped a lot of people on the session. So I wanted to go over that here on the recording as well. Then, of course, we entered. We went to target 1 and then went even higher just a little bit. And then here at 2:30, we had a red folder news event. So with this news event happening, we always pull out 1 hour before. So we pulled out the trade right here. That's two candles before the news event, or like 1 hour before the news event. And this gave us a risk to reward of 1.67. So if you look at that in the track record, 1.67 risk to reward. If you're risking 2%, you're making 3.34% profit. So that's the gold trade we took. And then we have the last one, which is, I believe, GBP USD. Let me see. Yes. So the last one is GBP USD. We had a break even on that one. So this was May 2nd. Let me see if I have the drawing over here. GBP USD, May 1st. Yeah, that can be the one. Yes, that's it. So on GBP USD, we actually had an arrow already, but personally, I didn't take it because this W was not really interesting. The lowest point, like I just said, I want to have the lowest point as my first leg, right? So this is the lowest point of the pullback. By the time we had this arrow, the lowest point of the pullback was right here. So that's not what I'm looking for. And I know a lot of people will say, hey, but this is W, because, if you look at the bodies, you see this. I don't like it. I look at the wicks as well. So I don't look at this in this way. I look at the wicks. So if I'm looking at the wicks, I'm seeing a lower low. And therefore, I'm not taking this trade. And even if you want to take it, I believe the stop loss is going to be pretty big as well. This stop loss was about 55 pips. I like my stop loss to be less than 30. So this first arrow was not valid for those reasons. The W was not perfect, or not good at all, actually. And the stop loss was like 55 pips, right? Then what we see? We have this W, which we have the lowest point right here. Second leg over there. And then the arrow. We entered and we had plenty of time to enter, actually. We had 1, 2, 3 candles, so that's 90 minutes of time. And we hit target 1 pretty fast. Then from there, we just dropped back to break even before all the news happened, right? This was a red folder news event over here. We didn't even take, or we didn't even need to pull out before the news because we already got kicked out before the news. We got kicked out at break even, giving us a 0% profit, 0% loss on this trade. If you count these trades up, like that's about 2 weeks of trading, I believe. We have a total of, let's see, 4% over here, 1.9 over there, 4% on this one, and 3.3 on the other one. So that's about 13.24%, which is actually great to do in these few trades that we took. So that being said, that was a recap of the week. Of course, this was a recap of about 2 weeks. Next week, we're going to go over the 100 mark milestone, whatever you want to call it, the first 100 trades tracked. So that's an exciting thing. Of course, you can see right here over the last 98 trades, we had only 14 losses, which is great, 85% win ratio. And this is actually what happened to our account balance, starting with 1,000 is now up 328%. Of course, this is starting in September. So if you go back, you can check the whole track record with the 100 trades, like the 98 trades right now. You can check the whole track record. It's all logged, tracked, and commented. So you can, of course, read everything through. But that's actually what we've been doing since September. So I'm excited to see more of this. I'm excited to see you guys again next week. I'm gonna try my best to upload every single week, or bi-weekly can also be a thing like this one. But again, thank you guys for being here, and we'll see each other in the next video. Let's go.